Hi everyone, I hope you are all safe and healthy with your family and friends. In this video we are going to learn about 11th Standard Accountancy, Chapter 10, Depreciation Accounting, Illustration Sum number 9. Let's read the transaction. That is, on 1st April 2015, Kumar purchased a machine for Rs 80,000 and spent Rs 20,000 on its installation. The residual value at the end of its expected useful life of 8 years is estimated at Rs 4,000. On 30th September 2017, the machine is sold for Rs 50,000. Depreciation is to be provided according to the straight line method. Prepare machinery account and accounts are closed on 31st December every year. What we have to note date of purchasing and residual value 4,000 rupees, expected useful life 8 years, date on sold goods, sold assets, and closing accounting period. Okay, what method they used? Straight line method. What we have to prepare? Machinery account. Listen here carefully. Depreciation is to be provided according to straight line method. That means they didn't given here at the rate of depreciation. So we have to find at the rate of depreciation. Then only we have to calculate the machinery account and everything. Okay. So we have to find at the rate of depreciation. Okay. So for that, what's the formula for rate of depreciation? Amount of depreciation per year divided by original cost into 100. Listen here. Amount of depreciation they didn't given in the transaction. So we have to find the amount of depreciation to calculate the rate of depreciation. Okay. So for that, first we have to find amount of depreciation. The amount of depreciation is, what's the formula for amount of depreciation? Original cost of the asset minus estimated scrap value divided by estimated life of the asset in the year. What's the original cost of the asset? Listen. The cost of asset, purchases price plus installation cost. What's the purchases asset price? That is 80,000. Installation cost is 20,000. We have to add it. So we will get 1 lakh rupees. This is the original cost of the asset. So okay. So we enter 1 lakh rupees. What's the residual value? 4,000 rupees divided 80 years useful time. Okay. So now we have to cancel it everything. We get 98,000 divided by 8. Okay, 1 8 is 8. Remaining 1. We add here 16. So 2 8s are 16. This is 30 we will add here. So 12,000. 12,000 is the amount of depreciation. Okay. So we got amount of depreciation to calculate the rate of depreciation. What's the formula? Amount of depreciation per year divided by original cost into 100. The amount of depreciation is 12,000 rupees. Original cost 1 lakh rupees into 100. Now we have to cancel it. So for that, this 20 will be cancelled. For this 30 cancelled. Okay. Remaining 12. That 12 is the rate of depreciation. What's the rate of depreciation? 12%. Okay. So we find the rate of depreciation at the straight line method. Okay. Now we are going to calculate the profit or loss of the sale of the asset. Okay. Using with the straight line method. So the formula is particular amount rupees. What's the original cost of the asset? 1 lakh rupees. Dated on 1/4/2015. So original cost means 8,000. 80,000 plus installation charges. We have to add it, we will get 1 lakh rupees. Then we have to calculate the first year depreciation. Okay, dated on 31st December 2015. How can we take this date? So they have given in the transaction the closing date of the accounting period for every year. So the closing date is 31st December 2015. We have to take it here. Okay, so we have to take original value into 12% into 9/12. How do we get this period? Listen, when they purchased asset 1/4/2015. 1/4 means April. Okay. What's the closing accounting period for every year? 31st/12/2015. So we have to take from the April. Okay, so they purchased asset on 1st April. We have to take the April month fully. So April, May, June, July, August, September, October, November and December up to closing accounting period. How many months we have? 9 months. So 9 months out of 12. Okay, so now we have to cancel it. Okay, so for this 12 is cancelled. For this 20, this 20 cancelled. Okay, then we have 9 into 1000 rupees, 9000. So 9000 is the first year depreciation. So we have to subtract it. Okay, from original cost we will get 91,000. Now we are going to find the second year depreciation on with the closing accounting period. So we are using the straight line method only. We have to take original cost with 12% at the rate of 12%. For this 20, this 20 cancelled, remaining 12 into 1000, 12,000 we get. Okay, so now we have to subtract 12,000 from 91,000. We will get 79,000. Now we are going to find third year depreciation with 39/2017. How can we say we calculate 39/2017? Listen, in some questions we have calculated 3 years depreciation. In some transaction we have calculated 2 years for depreciation, to calculate the depreciation for 2 years. Some transaction we have calculated 3 years for depreciation. How can we calculate these years? Listen, we have to take the purchasing period. Okay, the purchasing period is given there, and we have to also take the sold asset. Okay, sold asset period, they also given here 30th September 2017. So from the purchasing period to selling asset period, we have to calculate the depreciation value. Okay, so the purchasing year is 2015. From 2015, 16, 17, 30 September 17 up to 13 September 17, we have to calculate the depreciation value. Okay, so listen, so for that we have taken that period, selling period. Okay, for third year depreciation value is 39/2017. 9 means September. Okay, then we have to enter original cost and depreciation rate 12% into 9/12. What's meaning of 9/12? Listen, in previous year what's the closing accounting period? 31/12/2016. What is the next accounting period after 31/12? 1/1/2017. So 1/1 from 1/1/2017 to we have to calculate up to 39/2017. That is selling period. Okay, so from 1/1/2017 means January. That means January, February, March, April, May, June, July, August, September. Up to September we got 9 months. Okay, so 9 out of 12. Okay, so now we have to cancel it. For this 12 is cancelled. For this 0, this 20 is to be cancelled, and remaining 9 into 1000, 9000. This is the third year depreciation. Now we have to subtract 9000 from the 79,000. We will get 70,000. This is the book value. Okay, now the selling price is, we have to subtract selling price from the book value. Selling price is 50,000. We have to find the difference between them to find whether it is profit or loss. So for that we have to subtract 50 from 70. 50,000 from 70,000, we will get 20,000. Okay, can you tell me whether it is profit or loss? Listen, the selling price is less than that of the book value, so this is the loss of the sale of asset. Okay, now we are going to prepare the machinery account in the ledger account. So we already prepared the format of the ledger account. So When you purchased machinery, April 15, 2000, April 1, 2015. What's the journal entry for purchase of machinery? Machinery account debtor to bank account 1 lakh rupees. That means when you purchased machinery account debtor to bank account 80,000 rupees. This is the purchasing price of the asset. Okay. So machinery account is on debit side. You go to debit side dated on 1st April 2015. The opposite account is to bank account. We have entered here 80,000 entered in the amount column. Then we have to enter the installation cost. Okay. What's the journal entry for the installation charge? Machinery account debtor to bank account 20,000 rupees on the same date. So April 1, machinery account is on debit side. You go to debit side. We have to enter the opposite account. That means to bank account on debit side. Amount is 20,000 is entered into the amount column. Then we have to enter the depreciation dated on 31st, depreciation account dated on 31st December 2015. What's the journal entry for the depreciation account? Depreciation account debtor to machinery account 9,000 rupees. Where is machinery account? Machinery account is on credit side. So you go to credit side, you have to enter the opposite account, that is depreciation account 9,000 rupees. So when come to credit side, we entered by depreciation account 9,000 rupees dated on 31st December 2015. Okay. Then we have to find which side has higher value. Of course debit side has higher value. So 80,000 plus 20,000, 1 lakh rupees we have to consider as the total. So we have to enter the total on both debit and credit side. Okay. Then we have find the differences. So for that we have to subtract 9,000 from the total amount of 1 lakh. We will get 91,000. This is the closing balance of the account, closing balance of the machinery account. Okay. So by balance carried on means closing balance of the machinery account. We have to enter the same date 31st December. Okay. Then we have to brought down that 91,000 to the opposite side and enter below the total. Okay. Against this 91,000 you have to enter to balance brought down. Okay. This is the open. To balance brought down means opening balance. By balance carried on means closing balance of the machinery account. To balance brought down means opening balance of the machinery account. And on date column you have to enter the next day from the December 31. So December 31 2015. What is the next day from the December 31 2015? Of course January 1 2016 we have to enter here. This is the next accounting period of the opening balance of the machinery account is 91,000. Then we have to enter the second year depreciation account dated on 31st December 2016. What's the journal entry for depreciation account? Depreciation account debtor to machinery account 12,000 rupees. So we entered 31st December 2016 by depreciation account. We have to enter the opposite account. What's the journal entry? Depreciation account debtor to machinery account. Where is machinery account? Machinery account is on credit side. So you go to credit side, you have to enter the opposite account by machinery account 12,000 rupees entered. Then which side we have higher value? Debit side we have higher value, that is 91,000. We have considered that 91,000 as the total. So you have to enter the total on both debit and credit side we entered. Okay. Then we have to find the difference. So for that you have to subtract 12,000 from total amount 91,000. You will get 79,000. Again this you have to enter by balance carried down on the same date. Okay. So this is the by balance carried down means closing balance of the machinery account. Okay, 79,000. Then we have to brought down that 79,000 to the opposite side and enter it below the total. And against the 79,000 you have to enter to balance brought down. So balance brought down means opening balance of the machinery account. On date column you have to enter the next day from the December 31 2016. What's the next day from the December 31 2016? January 1, 2017. This is the next accounting period of the opening balance of the machinery account is 79,000. Then we have to enter the third year depreciation account, that is dated on 30 September, that means 9 means September 2017. What's the journal entry? Depreciation account debtor to machinery account 9,000 rupees. Where is machinery account? We are preparing machinery account. Okay, so where is machinery account? Machinery account is on credit side. So you go to credit side, we have to enter the opposite account name, that is depreciation account 9,000 rupees. So we entered depreciation by depreciation account 9,000 rupees entered. Okay, dated on September 30, 2017. And then you sold the machinery, right? So what's the journal entry? When you sold machinery, bank account debtor to machinery account. Whenever you purchases machinery, what's the journal entry? Machinery account debtor to bank account. Okay. When you sold machinery, what's the journal entry? Bank account debtor to machinery account. Whenever you get loss, the journal entry is profit and loss account debtor to machinery account. Okay. So we combine together, we prepare the journal entry, that is 30th September 2017, bank, when you sold machinery, bank account debtor 50,000. When you got loss from sold machinery, sold asset, you got loss. So for that you have entered, you have passed the journal entries profit and loss account debtor 20,000. And to machinery account, the total is 50 plus 20, 70,000. Okay, so where is machinery account? Machinery account is on credit side. So you go to credit side, you have to enter the opposite account, bank account and profit and loss account 50,000, 20,000. Okay, so September 30 you have to enter to bank account 50,000, profit and loss account 20,000. Okay, now we have to find the total. On debit side we have 79,000. Credit side you have to add this amount, that is 9,000 plus 50,000 plus 20,000, you will get 79,000. So listen here. So whenever you find the profit and loss account, the machinery, that asset account is to be same total. Okay, 79,000, 79,000. Do you have any doubt? Please comment it on the comment box. Thank you. Take care.